Now, this morning, estate agents Savills published a new report on the state of the office market. There's lots of talk, of course, that remote working is going to shrink the market in a substantial way. But is there any sign of this actually happening? Well, joining me now for more on this is Savills Ireland Director of Research, John Ring. Morning, John.
Morning, good to be with you this morning.
So take-up of new space was down 50% last year, in Dublin anyway. And I suppose that's not surprising given the way the economy took a dive and people obviously wanted to save money. But do we have any evidence that firms are deciding not to take up space because they're moving to remote working in a substantial way?
Yeah, so last year our report shows that there was about 1.7 million square feet of take-up. We had a really strong start to the year in quarter one when 1.1 million square feet was taken up. For the rest of the year, take-up did fall off. There's about 600,000 taken up post-COVID. So yes, COVID obviously had an impact, because of the movement of people and lockdowns. But looking ahead, I'd be relatively optimistic about the outlook for the Dublin office market. If we look at the indicators such as active demand out there, so as people or companies looking for space at the moment, there's 4.6 million square feet worth of deals looking out there for space in the market at the moment. And that compares to 5.2 million square feet at the start of 2020. So in terms of a 12-month basis, it's relatively, it's down a small bit, but it's very strong demand still.
Yeah, so obviously I think it's fair to say there will be more people working remotely from now on, but that doesn't necessarily mean, I suppose, that firms will take up less space. They may, in fact, John, decide to do different things with the space that they take up, and that means that they actually need a bit more than they otherwise would.
Yeah, exactly. Yeah, so I think there's without a doubt, the flexibility is a key theme across various sectors of the economy, and offices were transitioning to greater flexibility in terms of their spaces as places of collaboration and where people meet for high value work. And certainly I think that's still going to be the case, but there's no doubt as well that working from home will be a greater element. So you could see working from home for tasks that require, focus, concentration and quiet, but really companies, knowledge-based companies really depend on innovation and collaboration and sharing of ideas, and that can only really be done in person, and the office market's really the venue for that. It's interesting really, if you look at the costs in terms of occupier, so a typical corporate occupier that takes office space, actually only about 10% of their costs is real estate, 80% is talent, so your salary. So okay. In terms of looking at it through this prism, this is why companies focus on the best city centre offices or invest in real estate, because it helps maximise the return from your 80% rather than trying to cut costs on the 10%. Does that make sense?
Yeah. What about Brexit, John? That was kind of seen as a potential catalyst for increased take-up. What's been the impact since the deal was announced?
Sure, we have seen a bit of a tick-up in activity so far. We're obviously only a month and a half into it, but over the last number of years, we've been quite constrained in our forecasting about the impact of Brexit. And while it has picked up a small bit because there has been essentially a no-deal Brexit in terms of for financial services. So we are seeing a bit of a pick-up there, but overall we'd be relatively conservative in our outlook there. The big driver for Dublin essentially is your tech, and that's where I'd be optimistic as well for the market. If you look at this time last year, the big tech companies that have a huge presence in Dublin that's rather unique are Facebook, Amazon, Microsoft and Google, and of course LinkedIn is part of Microsoft. And then in Cork, we have Apple and also Amazon active there. And if you just look at these companies, they're taking a huge amount of space this year and in the coming years, but they really will need that space because their market capitalization has actually increased by 50% over the last year to 8 trillion. So Ireland is actually in a very good position in having aligned itself with these big tech companies. And look, before Brexit, you might have saw would they have expanded in London rather than in Dublin? Perhaps. But uncertainty regarding visas and the outlook for that market, in our opinion, I think actually that's where the big Brexit benefit has come. You won't see it in terms of relocation-specific announcements like you will on the banking side that have to be made for passporting and those that have been made over the last couple of years for those kind of reasons. But there's this silent increase in take-up, and that's really due to the tech sector.
Yeah, interesting point. All right, it maybe not as obvious as the financial services one, as you mentioned. How are rents holding up?
So rents are about €60 square foot. We've revised them down slightly. There is potential maybe for them to fall slightly further. There is uncertainty still in terms of when we're back to the office. So those things are overhanging the movement of people, especially for new occupiers, which is important coming into the market. If you got your US tech company looking to set up in Europe, the movement on restrictions on movement and people, that's really playing, and that's understandable why we're in lockdown as well. I mean, we won't see the office open up until the rest of the economy opens up and it's safe to do so. But looking ahead, I think you will see a bit of a scramble really for existing space. So in terms of the buildings that were delivered last year vacant, because if you look at the pipeline looking forward, actually 60% of the space that's due to be delivered this year is already let. And then if you look at 2022, over 60% of the space in 2022 is already let. So occupiers will have to start thinking about their requirements and start planning in that regard. And there's actually quite a constrained pipeline. So in terms of the buildings that were delivered last year and are available, I think you could quickly see a bit of a competition open up for the best pitches in the town. Yeah,
well, certainly if there's kind of only 40% of the space that's being built is on the open market, certainly you would think that would support rents. All right. Very interesting stuff, John. That's all we have time for this morning. That's Savills Ireland Director of Research, John Ring there. We'll be back after this short break.